Fraud examination involves the systematic examination of financial records, transactions, and activities to identify, investigate, and prevent fraudulent behavior within an organization. It aims to uncover instances of fraud, such as misappropriation of assets, financial statement fraud, corruption, bribery, and other deceptive practices. Here's how to detect and investigate fraudulent activities effectively. Understand fraud risk factors. Familiarize yourself with common fraud risk factors, red flags, and indicators of fraudulent behavior, such as unusual transactions, discrepancies, anomalies, and inconsistencies. Consider factors such as internal control weaknesses, lack of segregation of duties, management override, and financial pressures that may contribute to fraud. Establish anti-fraud policies and procedures. Establish and communicate anti-fraud policies, procedures, and code of conduct to promote ethical behavior, deter fraud, and encourage whistleblowing. Implement controls, checks, and safeguards to prevent, detect, and mitigate fraud risks throughout the organization. Conduct fraud risk assessment. Conduct a fraud risk assessment to identify and prioritize areas, processes, and transactions susceptible to fraud. Assess the likelihood and potential impact of fraud risks based on factors such as inherent risk, control environment, and historical incidents. Implement fraud detection techniques. Implement fraud detection techniques such as data analytics, forensic accounting, trend analysis, anomaly detection, and predictive modeling to identify unusual patterns or behaviors indicative of fraud. Use data mining tools, software applications, and statistical methods to analyze large volumes of data for potential fraud signals. Encourage whistleblowing and reporting. Establish channels for employees, customers, vendors, and other stakeholders to report suspected fraud, misconduct, or unethical behavior anonymously and without fear of retaliation. Provide training and awareness programs to educate employees about fraud risks, reporting mechanisms, and the importance of ethical behavior. Conduct investigative procedures. Conduct investigative procedures, interviews, and inquiries to gather evidence, documentation, and witness statements related to suspected fraudulent activities. Follow established protocols, legal requirements, and ethical standards when conducting investigations to preserve evidence, maintain confidentiality, and ensure fairness. Engage experts and specialists. Engage forensic accountants, fraud examiners, internal auditors, legal counsel, and other specialists with expertise in fraud detection and investigation to assist in complex cases. Collaborate with law enforcement agencies, regulatory bodies, and external forensic experts as needed to support fraud investigations and prosecutions. Document findings and evidence. Document findings, observations, evidence, and conclusions obtained during fraud investigations in a clear, concise, and comprehensive manner. Maintain detailed audit trails, work papers, and case files to support investigative findings and potential legal proceedings. Take corrective actions. Take appropriate corrective actions, disciplinary measures, and remedial steps to address identified fraud risks, control weaknesses, and compliance deficiencies. Implement control enhancements, process improvements, and policy changes to prevent recurrence of fraudulent activities. Report and communicate results. Report findings and investigative results to management, the board of directors, audit committees, and other relevant stakeholders in a timely and transparent manner. Provide recommendations for strengthening internal controls, enhancing fraud prevention measures, and improving organizational governance. By adopting a proactive approach to fraud detection and investigation, organizations can mitigate fraud risks, protect assets, safeguard reputation, and maintain trust and confidence among stakeholders.